America's financial future was definitely on the ballot this year. Joe Biden is set to inherit an economy that's been absolutely battered in 2020.
There are things that are happening that are very much feeling like a runaway train when it comes to the U.S. economy.
The COVID pandemic has exposed really deep structural flaws in our economy.
We have a health crisis, an economic crisis, a racial justice crisis, a climate crisis. We need to come together to solve these crises, to solve them as Americans.
We've seen record unemployment, businesses declaring bankruptcy, an eviction crisis, not to mention the fact that we're heading into winter, a time when COVID-19 is expected to kill tens of thousands more Americans, devastate hospital systems nationwide, and potentially lead to another round of rolling lockdowns.
Biden has a real plan to focus on technology and staying competitive. Biden is looking to spend $2 trillion on green energy.
It starts with doing everything possible to get the COVID-19 under control so that we can reopen our businesses safely and sustainably, resume our lives, put this pandemic behind us.
A Biden White House with a Democratic Congress will enable tax reform, a large COVID package in the first quarter, healthcare reform potentially.
It's all about kind of the details here. And it's all about how anything is going to get done in a Washington that appears to be very much on the path to gridlock yet again.
So a lot of big ideas from Biden on the campaign trail. But will his plans actually work? And what does the Biden White House mean for the economy?
The President-elect of the United States of America, Joe Biden.
Biden locked in his victory by winning the Electoral College. But the Electoral College doesn't really give us a full picture of the record number of Americans who voted and why certain groups of people voted the way that they did. Based on exit polls, let's take a look at who showed up to vote this year. In terms of household salaries, the majority of voters reported making $50,000 to $200,000 a year. 7% of voters made over $200,000. Biden was a choice for voters making under $100,000, while the majority of those making more than that voted for Trump. Trump gained a little support among men when you compare 2020 results to 2016, while the majority of women, a key voting bloc in recent years, voted for Biden.
Going into this election, we were and are in the midst of what's being called a she-cession. That is that since COVID started, women have been hurt far, far worse economically than men have in terms of losing their jobs, in terms of having to balance trying to homeschool their children, take care of their homes, and work full-time, which is virtually impossible. We must do something for women, and I think that is reflected obviously in the high turnout, and it's reflected in the win for President-elect Biden. Everyone is impacted by the fact that women were the majority of the workforce just at the beginning of this year and now are dropping out. It's going to affect our GDP. It's going to affect our companies. It's going to affect our ability to innovate. It's really detrimental to all of the economy and to all workplaces.
In 2020, pandemic policy is economic policy. So a big part of his message on the campaign trail came down to how he was the better person to combat the pandemic's devastating impact on the economy. Experts say that delivering on that promise fast is going to be key.
The big rock for now in our rucksack is a stimulus deal.
A stimulus plan under President Biden is likely to include provisions similar to the last one: extended crisis unemployment programs, an extension of the Paycheck Protection Program, massive-scale testing, PPE distribution across the country, plus new measures like a national contact tracing force and covering health insurance costs for the newly unemployed. Biden is also expected to push for emergency aid to state and local governments, an issue that's turned partisan in recent months.
Republicans have a big problem with sending Democratic states additional financing. They tend to view this as poorly run, poorly managed budgets at the state level.
The stimulus deal everyone's been waiting for, that's only one part of Biden's pandemic recovery plan. What he actually wants is something much bigger. For the country to spend over $7 trillion on things like infrastructure, which includes the creation of 10 million clean energy jobs, plus spending on housing, education, economic fairness, and healthcare. He's bundled all his ideas under the slogan, Build Back Better.
Build Back Better is trillions of dollars in new spending, all targeted at longer-tailed fiscal stimulus, tends to be thought of over a 4 to 5 year period. And it would be very focused on integrating ideas that initiated with Republicans of bridging public-private partnerships to achieve infrastructure goals.
Job creation is key to Biden's plan to combat COVID. In addition to millions of clean energy jobs, he also wants to create 100,000 new jobs in the public health sector to beef up our medical and caregiving workforce, and to make sure there are more manufacturing jobs, ones that are unionized, not least of all to ensure that we have robust domestic supply chains for essential goods, a problem we didn't realize was quite so dire until this year, when we saw a wave of virus-induced shortages of critical items.
I think manufacturing, when you look at what he's looking to do with procurement and supply chains, the manufacturing sector, and payback places like Pennsylvania, Ohio, Michigan, I think manufacturing is going to be a real focus.
Biden's infrastructure plan is a big part of his proposal, which Moody's Analytics thinks could generate 18.6 million jobs in the next 4 years if Democrats take the Senate. 2 of the $7 trillion he wants to spend is on infrastructure, clean energy, and getting Americans to work in energy fields.
The Chinese have decided that green energy technology, climate change is a growth engine. You know, we used to think of it as somehow slowing growth to focus on these things, but the Chinese have clearly identified this space as a growth industry. I think the Biden administration sees it both in terms of economic growth, but also in terms of a political agendas. And I think over the long term, the energy sector, at least the green space, is going to be a big growth factor.
Addressing the gaping racial wealth gap is the final pillar of Biden's plan for the economy, an issue that was laid bare thanks to the pandemic.
Inequality, income inequality, access to opportunity, diversity and inclusion is a big piece of all of the social disruptions we have seen throughout the summer.
His plan includes tens of billions of dollars invested in minority-owned businesses and a college affordability program, paving the way for a free public university education for families with an income under $125,000. Biden has also promised that 40% of that $2 trillion he wants to invest in clean energy will go to disadvantaged communities. Remember that nearly 60% of low-income households supported Biden.
To pay for all of this, Biden wants to tax higher income Americans and corporations. He wants to raise taxes for households with incomes above $400,000 a year, plus limit their deductions. And he's talked about boosting the corporate income tax rate to 28% from 21%. But remember, Biden can't deliver on any of these promises, not even the fiscal stimulus that people like Fed Chair Jerome Powell are requesting, without the approval of Congress.
For economic policy is a great example of how presidents may have amazing ideas, but they need Congress.
Will Republicans come along and play ball? I'm unsure about that as we talk today.
NBC News projects that in the upcoming 117th Congress, House Democrats will keep the majority and the Senate is still in play. The 2020 election was host to 35 Senate elections. As a publication, Democrats in the Senate flipped Colorado and the late Senator John McCain's seat in Arizona, while Republicans flipped the Senate seat in Alabama. There are races too close or too early to call in Alaska, Georgia, and North Carolina. The special Senate race in Georgia will be going into a runoff on January 5th. In the event of a 50-50 split in the Senate, neither party would have control, and the VP would likely become the tie-breaking vote, if necessary, on specific legislation.
Democrats were hoping to become the majority in the U.S. Senate. They were hoping to be that push that they can get checks into people's hands for coronavirus relief, another round of checks for coronavirus relief. But that doesn't seem to be happening right now. If there's a divided government, you may not see something like that in the next year or two.
If Republicans control the Senate majority and Democrats control the House, and Biden is in the White House, it would really argue for very little policymaking.
That expected gridlock on Capitol Hill has been welcome news on Wall Street. Stocks surged following the election, even before Pfizer's good news about a COVID-19 vaccine was released. The Dow, S&P, and NASDAQ all posted their biggest weekly gain in 7 months at the end of election week.
Wall Street hates change. Wall Street wants to know the rules of the game, and then they want time to make bets based on those rules. So what I hear most from folks on Wall Street is less about being concerned with specific policies and being more concerned in general with volatility.
The stock market isn't the economy, and while Trump may have used it as a report card for the 4 years that he was in office, the priority for most Americans is what the jobs report looks like, and more importantly, where their next paycheck is coming from.
Now, to be clear, the U.S. economy is on the road to recovery. Job growth was better than expected in October, the unemployment rate fell sharply, and after its worst quarter in history, the economy came back strong in Q3, growing at its fastest pace ever. But the U.S. faces a tough fourth quarter. We essentially bought the Q3 recovery with stimulus checks and with boosted unemployment benefits. And now, well, coronavirus cases are surging across the U.S. We're still waiting for a fresh injection of cash from a new stimulus deal, and jobless claims continue to come in higher than the Great Recession peak of 665,000. So, taking this data into consideration, President-elect Biden, among others, expect our recovery to look something like the letter K, where the richest Americans rebound quickly, perhaps do even better than they did pre-COVID, and lower-income Americans keep on suffering. So what does this mean for the next 6 months? Experts tell us that the White House alone actually has little to do with how the economy will play out in 2021.
Regardless of who's in the White House, they're expecting the next few weeks to the next couple months to be a time of increased COVID cases, which will call for additional restrictions on engagement in local economies to try to keep the numbers down. And that is not a White House decision, that's a city and sometimes state decision that's made. So how GDP continues to recover, how the economy continues to recover is very much tied to if people are able to spend money. I think the biggest difference would be if there's a way to get a fiscal stimulus policy passed during the lame duck ahead of the Christmas season, that where consumer spending should be going up. That would potentially juice some recovery in a way that, absent a stimulus, we won't see.
I think employers are going to be a bit gun shy to go out there over these next 6 to 8 weeks to try and bring on new people without some assurance that they're going to get a stimulus deal.
But the question is, let's say McConnell goes down that road. He passes through his stimulus bill, which may not include stimulus checks, individual checks for families, COVID relief. Where will Joe Biden stand on that? And where will Nancy Pelosi stand on that, as she still maintains, currently is the House Speaker and House Majority Leader. So that's the dynamic of the COVID relief talks is going to be fascinating to see as we get through the next few months into next year.